Welcome back, and in our top business story, Abu Dhabi's economy is set to remain resilient. That's according to S&P. The US credit rating agency has affirmed that the outlook for Abu Dhabi looks stable and that the Emirates' fiscal policy will stay prudent and flexible over the next 2 years, despite the depressed oil price scenario. The ratings agency stated that if it observed pronounced improvements in data transparency, including on fiscal assets and external data, alongside further progress in institutional reforms in Abu Dhabi, it will consider raising the rates. Standard & Poor's believes that Abu Dhabi's measures to improve the effectiveness of its monetary policy, including developing domestic capital markets, is positive for the ratings, whereas the overall sovereign credit worthiness in the Middle East and North Africa region has deteriorated since its last report. The agency observed that since Abu Dhabi has extremely strong asset positions, it can leverage that to absorb the impact on the decline in oil prices. The US agency projected that the fiscal surplus for the Emirates will average about 2% of GDP in 2015 to 2018. S&P expects that the development spending of Abu Dhabi will support economic growth and increase to about 10% of total expenditures in 2015, from a relatively low 5% in 2014. Dubai's hotels recorded above 85% occupancy in January this year and will open 20,000 more hotel rooms by the end of 2016, as announced by STR Global. According to data compiled by the US-based travel research company Smith Travel Research, hotel occupancy in Dubai peaked despite continuous strong room supply growth of 6.8%. The travel research company clarified that although Dubai hotels' occupancy levels managed to stay above 85% for January 2015, this was 3 points lower as compared to January last year. STR Global claims that despite the declines in occupancy, Dubai still achieved one of the highest revenue per available room rates in the Middle East at $242.85. The research company informed that the demand for hotels continued to grow in Dubai, and it remained positive for the Emirate in every month for the past 5 years. The CEO for Dubai's Corporation for Tourism and Commerce Marketing, Issam Kazim, was quoted as saying that by January 2016, Dubai will open 20,000 more hotel rooms, with the focus shifting to mid-market properties. Eyeing the Expo 2020 targets, the CEO claims that Dubai is on track to achieve 150,000 keys by 2020 as a part of its plan to become the world's most popular city destination. Sharjah is likely to see a reduction in the number of people relocating from Dubai this year due to improved rental opportunities. That's according to a report. Real estate consultancy Azteco revealed that it expects increased vacancies and a decline in rental rates in the Emirate. It added that a muted year is on the cards in terms of market movement, following a modest 10% average rental increase in Sharjah, Ajman and Ras Al Khaimah in 2014. Rental rates in Sharjah's office sector are also expected to remain flat. The popularity of a number of high-profile sea and golf course-fronting master-planned communities in RAK, including Al Hamra Village, Mina Al Arab and Marjan Island, are also expected to hold firm this year, according to Azteco, with the report forecasting stable levels of demand from both sales and leasing as these communities become more established, resulting in marginal rate increases. Julphar, the largest Emirati pharmaceutical company, has announced that its sales revenue topped 1.4 billion dirhams during 2014, a year-on-year increase of 5.2%. According to a statement, Julphar revealed that sales were driven by private market sales, which saw a growth of 7.5%, while net profit rose 2.9% to 234.7 million dirhams. Gross profit reached 848.2 million dirhams, up 3.4%, and operating profit was 238.5 million dirhams, up 1.1%. Julphar's board of directors proposed a General Assembly date of April the 30th to distribute 15% cash and 5% bonus shares. The figures come as earlier this month, Julphar said that it had acquired a majority stake in Bangladesh-based RAK Pharmaceuticals, marking an expansion of its footprint in Asia.